As Tom Petty sang, the waiting is the hardest part. And we've been waiting a while here. And, the high was made on this is the Nasdaq here, daily chart of the Nasdaq. Welcome to my daily review. But it made this high here of 20,204 on December 16th. Today is March 20th, the first day of spring. Happy spring. Um, you could hear umpires throughout the country at Little League, high school games, college, spring training, yelling, play ball. And that is a sign of spring. And we were hoping for a little better results today. But like I said, made this high on December 16th. Today's March 20th. It's been over 3 months. The index has corrected 15% peak to trough, and people think that's a low. I'm not so sure right now. It corrected via time at first and then price. Right now we have this, people are making a big deal of this higher lows, but it's taken forever. You can see how quickly this sold off, and now it's taken forever on lighter volume to wedge up to a moving average. To me, that's a bear wedge action. I would not be surprised if this resulted in another leg down. I would be very careful out here if you're getting heavy in stocks because there's no indication that an uptrend is beginning. It's been below this black line. The Nasdaq has traded below its 200 simple moving average for 15 consecutive sessions. That's not bullish, folks. I wish I could, paint a better picture for you, but it's a 7.3% below the 50, which is this red curling, downward curling line. And the black line is the 200. It's 4% below the 200. So it just take a hell of a rally just to get back up to the 200. Yeah, so I don't see anything real bullish in this chart here on the Nasdaq. Sorry to say, it was down 59 points today, or 0.33%, closed at 17,691, 22% below the average volume. Like I say, the volume the last, I don't know, 5 or 6 sessions has been pathetic. Uh, this index does not look good. Let's go to the S&P 500. Anything better? Not really. It's been below its 200 here for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Okay, so it's just getting comfortable trading below the 200. And when you see a rally, you want to see a rally back through these moving averages with power, power higher, up back through 6,000 with big volume here. We're just not seeing that at all. We're just seeing this little wedge action. To me, this is bearish, and it's going to result in lower prices. The S&P is now 4.4% below the 50, 1.5% below the 200. It was down 12 points today, 0.22%. Closed at 5,662. There's nothing bullish about these charts at all. The RSP equal weighted down 0.42%. So yeah, the, the IWM did have a follow-through day yesterday, had an inside day today. I guess that's the most positive thing you could say here about the index. The small caps down 0.63%. It is making higher lows, but like I said, there's no juice in this move at all. I guess I'm gonna get to some of the popular stocks. I don't know. I don't really like the Magnificent Seven. So I did want to point out that Meta Platforms today give you that head fake where it looked like it was really gonna rip higher. And then what happened? I think it's like $25 off of its, yeah, it got up to like 610, closed at 585 area. So yeah, $25 from peak to trough here today. Yeah, was a 610, and the low was what, 585. Yeah, a $25 move. That's not healthy, folks. That's the old okey doke. So people getting excited, jumping into this market or getting their heads handed to them, and it's not pleasant. It's not a pleasant feeling. And I'm not going to go through all the other ones. None of them are doing anything. Nvidia. Below, all its moving averages. Looks like the index, right? This little wedge pattern here, kind of weekly, tries to trade up to moving average. This looks actually, quite bearish as the volume tails off here. this little bear wedge action. I would expect that to result in lower prices as well. But anything can happen in the market. It's springtime, so spring hope's eternal, so you got to be positive, right? Eternally positive, or at least hopeful. It will turn around at some point. I don't know when, but it will at some point. I've got to go back to the gold stocks now. The European stocks and the China stocks took a break today. I'm not going to cover them. They're not going to go up every day. They're above their moving averages for the most part. So I'm just going to go to what was strong today. And this is AU, had this one on the ready list this over the weekend. And folks at mcstockcharts.com have had this idea all week. And it's up 13.25%. You can see this breakout from this double bottom base here. So the gold stocks are strong. This is a UK stock or a South African stock. All right. USAU, another gold stock. You can see the group, one of the top five groups here. And this one popped off today, another 11 something percent. So the gold stock's definitely where it's at. This one I had yesterday at 985, definitely cleared that and followed through today to the tune of like 12%. That would look nice in the portfolio. Too bad I didn't have that one. I've been cautious in this tape because it's not a great tape for growth stocks. In fact, it's a horrible tape for growth stocks. This is a HMY, South African mining company, up nearly 2%, making new highs. I mean, that's what you want to see in your stocks, right? This is DRD, another South African gold mining company. Actually was down a little bit today, had an inside day, but you can see this thing has been super strong. What other ones do we have on here? SSRM, another one of these mining stocks. This is a Canadian miner. Made a new high today, then pulled back. Nothing wrong with that as long as it's above the moving averages, right? We make a new high, pull back. It's well above the 10 here, so that looks healthy. They're not going to go up every day, and it's still pretty extended there, 3.9% above its 10. Kinross, KGC is another Canadian miner. Yeah, that one looks actually pretty good here. 1229. I might put that one on the ready list here. Yeah, that looks good. 1229, just break out above that little base there. That looks good. What was the other one I was looking at? Oh yeah, Wheaton, WPM. Okay, starting to form a little shelf pattern after this big move. That one looks pretty good. AEM had 2 days of pullback. That's probably enough. Yeah, just allowing the moving averages to catch up. That looks fine too. I'm not going to go through the rest of the gold miners. That's enough of those. I did want to get to the insurance companies. This is all defensive, oil and gas, gold, insurance. These are defensive plays like a flight to safety. Not good for the overall market, and especially not good for growth stocks. Let me see here. This is Hamilton making a new high today, breaking out from that 2017 standard buy point. There you can see the consolidation pattern. Having a nice week, up 6% this week. Thank you very much. That's HG, the ticker symbol, and then Hartford is HIG. And this one still setting up in this base here, hasn't broke out yet. But if you own it, like I said, the waiting's the hardest part. This one's not bad though. I mean, with the way the Nasdaq's been going, anything flat is good, right? I got to go back to the Nasdaq because I want to point out, like you think it's having a good week. It was up yesterday. This thing's still down 62 points this week or 0.35%. It's been down 5 straight weeks. This is the second month in a row where it's just kind of diving here, down 6% this month, down 1,155 points. So February and March have been brutal. All right, I had to get that point out because it's all relative. When I'm showing you these stocks that are up 1% or 2%, making new highs, that's great in the context of the overall market, especially the growth stocks. I got to include Bro because Bro's not doing anything wrong. It's just kind of forming a shelf, but it's not breaking out or, I would say it's showing strength, just being in a little shelf pattern is showing strength. right at its moving averages. It's trading tight, but you want to see it move higher above that 121 level, and just can't do it. But not today. You can see the volumes drying up. Maybe tomorrow or next week. Remember, tomorrow is the third Friday of the third month, so it's a monthly options expiration, quarterly options expirations on Friday tomorrow. So anyway, just know that. Allstate is another one. Looking pretty good, trying to break out of that 209.88. I don't have that one on my ready list, but it certainly looks ready to me. And then Aflac is another one. Looks pretty good, trading tight within a base near its moving average. Aflac looks good. And then BRKB, we got to give it up for the Oracle of Omaha, Warren Buffett, one of the strongest stocks on the market right now. And that just tells you the type of market that we're in. This is a flight to safety. Going to old Uncle Warren, who's actually hoarding cash. I believe he's got about 300, $20 billion in cash just sitting around waiting for a dip in the market so he can bust out the bazooka and start buying stuff. Um, but Uncle Warren's stock is hitting new highs here. And let's just take a look over the past year, up 27%. That's not bad, right? 27% move. And since 2025 started, it's up 16.65%. And you can compare that with the Nasdaq or the SPY. It's just killing them. This thing's outperforming badly. How about the IWM or the Dow? It's just kicking butt all over the place. So all the indexes are down. Berkshire's up 16.65. Flight to safety and one of the stronger stocks in the market. It's been up every day for like the last six sessions, making new highs. There's a lot to like about this. I just wish you'd pay a dividend. But anyway, it's not really an insurance stock. He does own insurance. It's in the diversified operations category or industry group, and Uncle Warren is killing it. So congrats to those holding long Berkshire Hathaway. All right, I'm going to move on to just a couple of oil stocks. I mentioned oil earlier. The commodity itself is just kind of floundering around, but some of these stocks are starting to move out now. This is AM Antero Midstream. This is a natural gas play making new highs today. That one looks good. EQT is another one that I like. Looks pretty darn good here. You think, oh, it's only up a quarter of a point. Well, a quarter of a point's pretty good in comparison, right? It's all relative. This type of tape, you're not seeing any stocks running away and hiding. It's just not that type of environment right now. AR is another one. Yeah, it looks pretty good in this base here. I don't think I'll include it tomorrow, but soon, if it just kind of goes sideways a couple days and allows the moving averages to catch up, you can see the 10 has already traded through the 50, and here comes the 21. And so once they get up here, maybe we'll put this one on the ready list if it doesn't take off, which I kind of doubt it will. WMB Williams company, just setting up in this space. I didn't put this one on the list either. It's certainly viable there at 59.15. Looks pretty good in that double bottom base area. Yeah. So if you want an oil and gas play, there's some out there, right? Besides the old standby, I saw, Chevron. I mean, it's a strong stock. I mean, it pays a nice dividend. This is a king of the XLE, Chevron and Exxon Mobil. So if you want, yeah, oil stocks, they're definitely perking up here. All right. I'm going to go to I said I wasn't going to do the European stocks, but there are some drug names that I like. TGTX is not one of them today. No, I'm going to go through AstraZeneca. This is a large, 237 billion market cap, UK-based drug name. And you can see this pattern here, a nice cup-shaped pattern. A little quiet week this week, a little inside week after this big move higher. That looks pretty good. It's only down, 1% in change this week. AstraZeneca looks pretty good to me. Novartis is another one that looks pretty good. I got to go to the weekly charts on these drugs here. Yeah, nice little cup-shaped pattern. Inside week this week, even though it's up nearly 4%. There you can see, yeah, That one looks pretty good. What other ones do I have? Oh, Jazz. Jazz is not, Jazz is a Palo Alto company, but it looks pretty good. Based in Ireland, as you can see, the headquarters in Ireland ran up, then had this little wedge pattern back to a moving average, and now is just surfing the 21 here. I did want to point out, yeah, Dublin, Ireland is its headquarters, but it's a Palo Alto company. Just they do that for tax reasons. And then, ARQT, this is a Westlake Village. Just stayed there recently. Westlake Village Company. This one looks pretty good. It's breaking out from its base this week up, nearly 15%. Let me see here. Arcutis yeah, there you go. Double bottom base. Bam, moved higher. What day was this? Tuesday? Monday? Yeah, Monday the 17th, 18th, 19th. Yeah, very nice week for Arcutis Biotherapeutics. All right. That's it for the drugs. I've got to go to, DRI had a deal with Uber today. I guess you can get your Olive Garden dinner salad or your beer, margarita, or wine delivered now with Uber. So the market liked that deal. I guess, up 5.7%, back up challenging new highs, and that's pretty rare in this tape. So, I'm not going to ignore Darden restaurants. It's the Olive Garden, chain. They also acquired Chewy's. If you go to Chewy's, I believe that's in the southwest, but up 7% this week. Darden looks pretty darn good. Pretty darn good. All right, let me see. Oh, Bros. Bros is one that I like. Bros is one that I put on the ready list. I expected this one because it's sold off, from 86 down to whatever, 58 or 57, and now it's starting to rally through. And I was hoping or thinking that it would follow through on yesterday's action because it moved sharply yesterday, up 5% with volume. And I was anticipating this to rally back through here with some volume, but it just did not happen. It did make it up to 67.49, but if we take a look on a smaller time frame here, yeah, this is the old okey doke, right? Where it ramps in the morning and think, okay, this thing's going to start ripping back towards 70, 75, and then nope, here come the sellers. So there's always sellers lurking in this bear markets. Excuse me, I shouldn't say bear market. During these corrections, you're seeing, anything that goes up is being met with selling. So you got to expect that if you own a stock and it's up a lot, you better take profits because if you don't, somebody else will. CAVA. CAVA was upgraded today, but this is the type of action that we're seeing, on a lot of stocks. It's just short covering. They've made a killing from 172 or 153 or 144, and it goes down to what? $75, you got to take profits, So, they're covering, buying their shares back and driving the price up a little bit, up 4.5% today. And I'm seeing a lot of stocks that look like that, beaten down. The old Jim Morrison trade, been down so long that it looks like up. This is DoorDash. This is wedging up higher. They had a deal with a company to deliver buy now, pay later, I guess. Buy your burrito now and pay later. I don't know if that's a great idea, but anyway, DoorDash is a very strong stock. Love the chart. I mean, this thing is just a thing of beauty. It has had it's been met with some weakness here recently, though. 3 weeks in a row of selling off. Looked like it may have hit a bottom here around 169. Now back up to 192. It's above its 50 now. I believe it closed above. Oh, it's above the 10, the 21, and the 50. So this thing's starting to track again in the right direction. That's the food stocks. I've got to go through the boring, kind of like medical stuff. This is McKesson, just acknowledging strength here, making a new high. It's pretty rare. There weren't a lot of stocks making new highs today. We saw in the morning when the Nasdaq was up, we were seeing a lot of short covering. But yeah, this thing's been up, 4 or 5 weeks in a row, making new highs. Just pointing that out. Another one in the health medical managed care group is CVS. I kind of like the way this thing's setting up. It's up 4.5% this week. I've had this one on the ready list as well. had that 3 weeks tight pattern. You can see it closed today near the high of the weekly range. Yeah, I mean, nothing wrong. This is more like a beaten down defensive play, starting to perk up a little bit. And then Cardinal is another one in this medical group, and it's set up in a base here. I kind of like it because it's defensive. You can see the blue dot and the RS line heading north, so showing relative strength, which, in this tape, it's pretty rare. Don't want to be negative. I got to stop that. All right. I did mention that, a lot of stocks beaten up, and this is what we're seeing, like the short covering stocks that have gone from 48 down to what, 38, 37, and now they have a couple days of short covering. That is not institutional support or rallying or anything like that. It's just short covering. I'm seeing this in a lot of different groups too. It's not just one or two groups. This is Steve Madden. You can see how badly this thing's been beaten down to a bloody pulp. $50 down to 25. Yeah, it goes up a buck. Big deal. Man, phew. This is a pretty brutal market. I mean, if you lost 50% in your stocks, you'd be hurting. You're going to take a look at your 401k statements at the end of this quarter. People are not going to be happy. A lot of stocks have been hammered, even though, like I said, the Nasdaq was only down, what, 9 or 10%, 15% off of its high, but a lot of stocks have been beaten down. This one was up today, but it's just short covering. And I could go to App Lovin, which is, you got to forget stocks like this. Yeah. I mean, 525 down to 230, and then makes a little, run up to 300. And it takes quite a while for it to rally back up here. I would expect that to get rejected. Just a lot of stuff like this. IMCR. Medical biotech stock, yeah, it was up today. I was looking at the stocks up on volume. There weren't that many of them, like 120, and a lot of them look like this. They're just up, and it's just short covering. It just sticks out. A short covering. That's not a rally. That's not institutional support. Carvana, which got beaten down due to Amazon getting into their game, but tried to rally back through the 200 today, close a tick below at 1.2%. Up 5%, but when you're at 292 and now you're at 185, I mean, that's not a very good consolation prize. Anyway, that's just the tape we're in. I'm sorry. Like I said, Tom Petty saying the waiting is the hardest part, and things will get better in time. As George Harrison saying, all things must pass. All right. Thank you for watching at mcstockcharts.com. We never give up in honor of the great Steve Jobs. We have earnings tonight from Micron. Yay! Micron 106.97. You can see here a clear pattern here. 114, 114.30, 112, 110, 1.7. And now, tonight is going to rally back up to 1.7. It looks like we'll see tomorrow, but this is definitely a lower high, and that's a lower low, which is a definition of a downtrend for Micron. So I'm not expecting much out of this move here. This tape just is not going to warrant it right now. FedEx, yeah, down 5% after hours. I didn't look at their report. I'll have more in the morning on these if there's any color to these. Nike, I did see where they reported lower sales. They're still relying on the Jordan shoe. I mean, Jordan retired, what, 20, 25 years ago? I mean, come on, let's get some. The Jordan shoe is their best seller, and Tiger Woods was one of their big sellers too. And both those guys were, their best days are behind was athletically for sure. So they need to get it together. Nike did see that they said that to China sales were weak, but also the US consumer is allegedly going to be slowing here in the back half of 2025. So it makes retail pretty tough. Lennar, I did not see the report. They reported tonight down 4%. You can see this home biller 186 down to 120. Just a rough tape for the home builders as well. And I just have to mention QUBT. I've been talking a lot lately about how the froth in the market, how frothy it got. This thing went from what, 64 cents to $27. Very frothy, like the froth off your beer. And then it just get knocked down to the ground here where it belongs. Down 11% today, 10% after hours. They reported, get this. I hope you're sitting down. $62,000 in revenue. $62,000. I mean, come on. Some people got that in their little piggy banks here. 62,000. This is not a real company. And a lot of this quantum stuff, they went up on hype, hyperbole. And so this is what, correction or a bear market will do. It'll knock the froth out of some of this stuff, and that's good because we want quality stocks going up and not this junk. All right, thank you for watching NMCstockcharts.com. We never give up.